Good afternoon, dear traders. This is Alex Gerchik. Today it's our webinar, the levels. We talk a lot about the levels. Today we're going to try to identify what's going to help you to identify the levels. It's a very important thing when you trade to identify the levels which are basically strong, which one is better, because in a lot of different cases you have levels which are going to be very weak and it's going to be no movement against those levels. If you identify the good level, most of the time it's going to be either fast moves or anything else. So it's very important thing to identify a good level. I'm going to start showing you today an example, because usually I'm a kind of guy, I'm more of an example guy than a talkative guy, because when you look at the picture, it's much easier to identify, especially when I will explain for you. So the job is today is to show you which levels are weak, which levels are strong. A lot of times I've been asking a question. I've been asked the question, what exactly do I use in order to identify the levels? Me personally, just for you to understand right away, because a lot of times people say, okay, you probably use the Fibonacci, or use RSI, or use anything else. Actually, I don't use anything. I'm a kind of trader which got used to just the chart alone. I started in 1998. Next year it's going to be 20 years how I start trading. And honestly speaking, the only way I identify the levels is with my own eyes. Just for you to understand, I just recently calculated, I went almost probably through the 7 or 8 million charts. So for you to understand, there's nothing I don't know about the chart. I mean, I look at the chart and I understand right away what's going to be there. I mean, what's going to be. I mean, especially you guys, when you follow my Monday analysis, either of the stock market, either of the forex, you know that 90% of the time I'm going to be right with the direction of the movement of the instrument. It doesn't matter it's oil, gold, or anything else. For me, it does not really matter what's to analyze. The way I basically analyze and I look at the a broad picture, I mean, I'm just looking for something which is giving me an example, and I know already what the stock's supposed to do. I recently interviewed a very, very interesting person, and he said basically as one of the best people in the technical analysis. Soon it's going to be the interview in English and in Russian, so you're going to be able to watch. And he told me one thing which basically support my opinion watching the charts. He said, I don't look for the patterns, neither do I, by the way. I look for the a broad picture to understand if the pattern is broken or not. So for example, if there's a false breakout and let's say euro is supposed to go up against those levels, and everything is working, so everything is fine. But if for example, there's a false breakout and the euro doesn't work the way it's supposed to be, you got to be ready for something else. So then something is going on there, something is cooking. So today we're going to try to look for some charts to understand which levels are strong and which levels are not strong. All right, I'm going to start showing you some pictures. I love pictures. I have a lot of them, a lot of step charts. All right, usually the strong level, it's a level where we have a lot of different touches. Like for example, if you see something like this, that's why when we make a picture, we try to identify if it's a level or it's a strong or not strong level. Okay, if you're going to see it here, this is probably nothing crazy. But once you get here and the price stay there for, let's say, almost a month, right here, one thing for a fact, there's a huge level. As you see, the price not always going to be like this, which is a limit buyer or a limit seller, or right like here. A lot of times the price are going to go around the price. So for example, it goes up, down, it touches a lot of times, but as you see, this is the zone where somebody is trying to accumulate position. Why they usually try to accumulate position by the zone? For one simple reason, they know it's going to be, they're going to identify the move. So very important thing, it's when they're going to identify the move. So one thing for a fact, if the basically instrument are trending in a range, for example, go back and forth, back and forth, back and forth, back and forth, you have to wait for the strong signal. The signal is going to be there. So as you see, one thing for a fact, there's accumulation and there is a distribution. So one thing for a fact, If big buyer or a big seller needs to accumulate the position, he is not going to let the stock go. You know, the stock is going to stay, and he's not going to go anywhere. So in this particular case scenario, you have to figure it out where the stock is trying to accumulate the position. It's either long or either short. A lot of times in the beginning, you will not going to be able to realize, but most of the time after that, as you see, you're going to understand that somebody is buying or somebody is selling. So very important thing, even if you're wrong at one point, it's not a big deal. So you have to identify where's the strong level of the stock. There is another way. Take a look. This is the perfect scenario, and it does not really matter, you know, what picture, what it says there. This is just I give an example as a Russian stock market for one simple reason. You'll understand that it does not really matter what kind of stock market is that. Russian stock market, it's a forex market or anything else. You're going to be able to make money because you'll understand them. So what do you see here? The consolidation, but in this particular case scenario, you see a very strong consolidation above the level and a false breakout. So whatever's going on here, this is the total continuation of what's been happening before. And then, as you see, very similar picture to what you've seen before. You see, you have a limit buyer, but you see we're closing below the levels, false breakout. So whatever we have here, this is a totally picture of what's supposed to happen. So the very important thing is to correctly identify the level, because the level is a point of price where you're going to able to buy or sell. Listen to me now, with a very small risk. The very important thing, what we're all fighting for on the market, it's to basically have a little risk, because it's much easier to take profit when you in the beginning of the move. If you're in the end of the move or in the middle of the move, basically your chances are going lower, lower, and lower, and getting smaller, smaller, and smaller. So every time when you basically identify the price in the correct way, and you take in a position at the level where the price is the best for the small stop, you gotta get in. So in this particular case scenario, this is a very simple scenario, very simple. It would be easier to identify the move for this particular stop. This is another typical scenario. I mean, you see one thing for a fact here. If you see a very good mirror level, right? You see a good mirror level. But the very important thing here, after mirror level, you see it's not going up. It's not going up. It's a consolidating. It's trying to consolidate. So 90% of the time, it's not going to go. So what do we have here? We have a limit person. He's trying basically to hold the stock, but there is a sellers are much bigger. So for example, when you see picture and you don't see this, you don't see this, you know one thing for a fact, that it's going to be definitely a move. And it's going to be a down move for one simple reason. If somebody is trying on a daily chart, and this is a daily chart, if somebody is in a daily chart above 180, you have no choice. You know one thing for a fact, the price of the stock is going to drop. But as I said before, very important thing, when you identify the level, it does not really matter what you trade after that. You trade false breakout, you trade breakouts, or you trade anything else. You have to identify what exactly you're going to do. So the very important thing is to identify that this level is the level. So as you see before, this is a very good scenario. This is resistance level, and this is repeated of the resistance level. So very important thing, as I said before, to identify. This kind of level is usually almost impossible to trade for one simple reason. Obviously, you know, you cannot sit all day long by the computer and watch out for the subject like this, and most of the time it's not going to happen to you. So as I said before, your trading has to be very simple and plain. This is a good case scenario. You're going to be able to trade here, as you see a lot of touches on the daily chart, and most of the time, if the basically chart is there, if the limit buyer seller is there, you're going to be able to trade very well. You see, as I said, I have a lot of picture, and now we're going to go to a different picture. I'm going to show it to you what I used. This is a special program where the Gerchik company is going to have very soon. This is a special feature where you're going to have a horizontal volume. As you can see here, this is the horizontal volume. The beautiful part about the horizontal volume versus vertical volume, vertical volume shows you only the value on that particular day, while the horizontal volume shows you the biggest volume on that particular price. For me, the most important thing, it's not the day, it's the price. I want to see if the price support or not, because I put the levels against the prices, not against anything else. So what do we see here in the top chart? We see a daily chart. Take a look. This is a daily chart. See, this is 54.24. So you see one thing for a fact. This is definitely a great level, because you know it's stopping the move. You see, it's stopping the move once, stopping the move twice, stopping the move 3 times. 54.24, and this is another level of 52.08. You see, 52.08 right here. I wanna show you right now. Hold on, just 1 second. You see, 52.08 and 54.24. So we have a level here, and take a look. That's exactly the level with the prices. You see, 54.24 and 52.08. So you know one thing for a fact, where the levels are coming from. Levels are coming from the biggest horizontal volume. That's the biggest prices which somebody support the price. Trust me. And this is the oil, and an instrument like oil, you know, which trades hundreds of millions of dollars a day. Somebody is going to support the price, and not right here, not to let the price go down and buy all of this contracts. It's the grade. So you see, you know one thing for a fact, you know when the volume is broken and it's no impulse right here, you know one thing for a fact, it's much easier to basically get this position. Okay, I understand it says a little bit of Russian, but my student basically prepared this. But it says tick to tick. It means on a daily chart, on a 1 hour chart, you have a value for the gold. It was a level of 1310. It was a level on the daily chart, and as you see, a penny for penny. Right here, a penny for penny. No problems. It was exactly on the same level as it was on the daily chart. So that's another level. We have right here Nikkei. Take a look. That's somebody is really like trying to buy here, and you see one thing for a fact. This is the level to identify, up and down. So you know one thing for a fact, how you're going to be able to trade. Right here it says the cluster. What's the cluster? It's been one of the biggest volume. As you see, that's where they came from. Right after that, there was like pretty much no volume, because once the position is accumulating, the volume is dropping. The biggest volume, it's always an accumulation, because when it's a distribution, somebody is just trying to get out. So you see one thing for a fact right here, you see, I want to show you right now so you'll know. It's no guessing. 19675, you see, right here. You have a biggest volume. Take a look. 19675. Okay, so you know one thing for a fact, is somebody is really trying to buy, and somebody's trying to sell. So you know one thing for a fact, there's levels. You see 19025, and right here 19675. See, that's the beautiful part. And very important thing is to identify the clusters, where the biggest volume is coming from. And very important thing, as I said before, a lot of times the people just don't believe in levels. That's the proof. That's the proof the levels work, and the prices are there, the biggest volume are there, the profile are there, the cluster are there. So you know, hold on, we'll go another one. Okay, right here. Take a look. This is a 5 minute, and this is a 1 hour. So you know one thing for a fact, there's a building level. You see, right here and right here. Now I'm going to talk to you a little bit more in a theory. A lot of times the people using the Fibonacci lines and everything else. You should understand one thing for a fact. That's nobody can prove yet why they're supposed to work. While the volume is there, volume is the best proof of what the level is there. So you know one thing for a fact, when you build in the level, you have to figure it out that it's a volume. It's something you cannot hide. Like for example, you put the Fibonacci. If you put it wrong, you have no levels. A lot of times you just adjust the Fibonacci and it's nothing there. You're just going to sit down and work on them and put it there a little bit higher, 61 retracement, 128 retracement, and most of the time you can't even explain where it came from. While when you look at the volume, a volume profile, you know one thing for a fact: there's accumulation and there's a distribution. Somebody is really buying and somebody is really selling. Anyway, it's been Alexander Gerchik. I'm sure we had a very interesting meeting today. I wish you all good luck, make money. Thank you very much, and all the best.